For decades, Japan's economy has been this huge puzzle, a story of stagnation that we've all heard about, the so-called lost decades. But right now, something is shifting. A massive change is brewing just beneath the surface. Today, we're going to crack this case of the frozen economy and find out if a great thaw is finally here. And it all starts with one, frankly, unbelievable number.
So let's just start with this. $5 trillion. That's the mountain of cash the Japanese companies are sitting on right now. And just so we're clear on how huge that is, that's more than the entire annual GDP of Germany. It's an absolutely colossal vault of money, just sitting there. And that right there is the central mystery we're unpacking today. Why? Why would one of the most advanced, wealthiest nations on Earth choose to hoard all that capital instead of, investing it, putting it into new projects, raising wages, innovating? To get the answer, we have to jump in the time machine.
Our story really begins back in the roaring 1980s. It was this incredible era of prosperity for Japan, but it also contained the seeds of its own destruction, what some economists now call Japan's original sin.
So in 1985, the world's big economies get together and sign something called the Plaza Accord. The main goal was to weaken the US dollar. But for Japan, the effect was, seismic. The yen's value exploded, appreciating by 50% in just a few years. They called it the Entaka shock, and it basically slammed the brakes on Japan's export machine, making its products super expensive almost overnight.
Now, to fight back against this shock, the Bank of Japan did what seemed logical. They cut interest rates down to almost nothing. The plan was to get the economy going again. But what it actually did was unleash a tidal wave of cheap money that had to go somewhere, and it went straight into stocks and real estate, fueling an insane speculative bubble.
And when I say insane, I mean just listen to this legendary statistic. Seriously, think about that. A small patch of land in central Tokyo was, on paper, worth more than the entire state of California. It's the perfect example of how completely unhinged from reality the valuations had become.
The raw numbers from that time are just as mind-blowing. The Nikkei stock market hit a peak it wouldn't even sniff again for over 30 years. The price-to-earnings ratio, a measure of how expensive stocks are, hit 70. For context, a normal healthy level is maybe 15 or 20. And at its peak, Japan's stock market made up 42% of the entire world's stock value. This wasn't growth, it was a frenzy.
Well, what goes up that fast, you know the rest. The bursting of that bubble plunged Japan into an economic winter that would last for decades. It created a deep national trauma, a psychological scar that really explains the mystery we started with. In 1991, the Bank of Japan finally hit the brakes and raised rates. The whole house of cards just collapsed. The stock market, it lost over 60% of its value. Land prices, even worse. They fell off a cliff, down over 80%. The entire financial system was basically crippled, drowning in loans that were never, ever getting paid back.
But here's the really crucial part. Instead of letting all those failed companies go bankrupt, which is the painful but healthy thing to do, the banks just kept lending them money to keep them on life support. This created what we now call zombie firms. And for decades, these zombie companies trapped money and talent, just sucking the innovative life out of the economy.
And this right here is the answer to our $5 trillion question. The entire generation of corporate leaders who survived that crash learned one very painful lesson. Debt is toxic, risk is a four-letter word, and cash is king. This deep-seated fear is why companies started hoarding cash, building a fortress to protect themselves from another catastrophe.
Okay, but that was then. Now, after 30 long years of winter, the ice is finally starting to crack. The Japan of today, of 2026, is showing some real signs of a fundamental shift, a thaw that could finally break that cycle of fear and stagnation.
Just look at this comparison. For 3 decades, Japan was defined by zero interest rates, falling prices, and wages that went nowhere. Now, the entire script has flipped. Interest rates are actually rising. We're seeing some mild, healthy inflation. And, this is the big one, wages are finally aggressively going up, which could kickstart that virtuous cycle of people earning more and spending more.
And this chart really says it all. The annual spring wage negotiations in Japan, it's a whole thing called shunto, have delivered back-to-back wage hikes of over 5%. That's the highest in more than 30 years. This isn't just a blip. It's a real, sustained push to get more money into people's pockets, and that's the fuel you need for a healthy domestic economy.
So the conditions are definitely changing, but how do you actually convince those risk-averse companies to finally open that $5 trillion vault? Well, the Japanese government is betting big on a massive, high-tech national strategy to give them a very compelling reason to invest.
The plan basically rests on two giant pillars. First is green transformation, or GX, a huge push to funnel money into renewable energy. Second is digital transformation, or DX, a national effort to drag Japan's IT systems into the 21st century and make a big leap into AI and semiconductors. The goal here is to create investment opportunities so good that hoarding cash finally seems like the riskier option.
And there's a serious fire lit under that digital push. It's something they call the 2025 cliff. It's this official government projection that says if companies don't modernize their ancient IT systems, the economy could start losing about $80 billion a year. So it's a race against time. It frames investment not just as an opportunity, but as a flat-out necessity for survival.
And what's really fascinating is that this cautious cash is king mindset isn't just a corporate thing, it's a national thing. Japanese households are sitting on almost $15 trillion in assets, and a full 50% of that is just in cash and low-interest bank accounts. Now imagine if both the corporations and the households start to feel confident enough to put that money to work. The potential for growth would be absolutely enormous.
Which brings us to our final question. After 30 years of stagnation, Japan really is at a crossroads. We've got rising wages, a huge national strategy, and trillions upon trillions of dollars just waiting on the sidelines. So is this the moment the economic winter finally ends? The beginning of a true renaissance? Or is this just a temporary thaw before the ice freezes over again? The next few years are going to be fascinating to watch.